Hello. Trading is closed on the 19th of April, 2022. Let's do our disclaimer, go over our calls, and make some predictions for tomorrow. This is my trading plan for Wednesday, April 20th, 2022. Remember, it's a plan. I can change it. I can be wrong. And any trade one makes should be at one's own risk. We had this big tank yesterday. I thought it was going to be followed by the pattern with the early high. Tends to be a rally day with a high in the final hour, and we got that. And I thought prices would go up, which turned out to be an understatement. Let's go over what we said. We said unless we gap and promptly undercut today's low, should see higher prices. We got that. The date of the low was yesterday, which is the date that was called for by Chris Carolan's work. And the question we have is this the low, or are we going to break through? Well, there's a spoiler alert. I don't like today's action. Could all be changed if we take this high out early tomorrow. But it's possible this could be a one-day wonder. Let's go over some of the reasons. We have a MEJT target 44.3173. Let me explain why I italicized this one. First of all, in the afternoon, we'll say we got an ultimate buy signal, ultimate sell signal. So ultimately both higher and lower price would print, and they did. Now I came up with a system between June and August of the year 2002. So this year is its 20th anniversary. And when I came up with the system in 2002, I didn't really use a computer. I just did everything by hand. And through trial and error, I found out that this pattern in the morning is an unsustainable pattern and that prices should return to this line. It was many years later that I helped someone write the computer program, and when I wrote it, I didn't have my notes with me or my book. I wasn't home then. And I really forgot which of the many things I tried I put in the book and which ones I didn't. And so according to what's in the computer program and what I said in the webinar, this is a sustainable program and it does not have to retrace. Well, I have a list of the failed targets generated with the targets in the book, and I have a list of the failed targets from the computer program, and the list has exactly the same numbers, no exceptions, exactly the same. So I know now that this generates higher prices with a legitimate buy signal, but I also know now it means it's sustainable until it hits its target. But I also know now it doesn't stick and it retraces here. So it generates both higher and lower targets. But if all you read is the book, you'll say this is a false move. And if all you look at is the webinar, you'll take it back. If you look at the webinar, you'll say this doesn't have to retrace. It'll hit a higher target, which is true. And if you look at the book, you'll say it has to retrace. In fact, I now know both things are true. It has to hit a target and it also has to retrace. End of speech. So that's the target for tomorrow. Actually, by early Thursday, 44.3173. And if we don't get up smartly, that's my call. This is a pattern I described maybe 15 years ago and have seen very little since. About 15 years ago, this was a very frequent pattern. I've never seen it in the beginning of a move. Invariably, I would see it when the move was ending. I called it the coup de grace pattern. No gap. In the first hour, prices have a massive rally with no gap and no pullbacks. In hour number 2, there's a slightly higher high with less than an hour left, and with only an hour left to trade. Prices have traded in a very narrow range. Now, 17 points might not seem like it's narrow, but when I came up with the rules, the market was somewhere between 600 and 700, 800. On a percentage basis, that's a narrow range. And what happens is, right as the last hour of trading starts, you break out, hit a new high of the day, and that's it. The move's over. I've had a few cases back then when we traded 2 or 3 points over this high, which you could multiply by maybe as much as 6 times now. But this was a pattern I'd seen only at the end of moves. It's an infrequent pattern, and whether it'll still work, I can't say. I've never seen it in the beginning of a move. But I look at it as a terminal pattern. I don't know why it works. My guess, and it's only a guess, is that we got a follow-through of a buying panic by the amateurs in the first hour. We saw it start the last hour yesterday. There was no follow-through by anyone who wasn't panicking. Anyone who was still short at the end of the day said, I can't stand this, we're not going to drop, just cover. And once all the shorts covered, there was no one left who was willing to buy, because nobody was willing to buy in the middle of the day. And whether or not that's why it works, I don't know. If it works, I don't know. But I've only seen this before, rare as it is, at the end of moves. We still aren't convinced that this consolidation's over. I would like to see us break out to new highs, but as I say, I'm very suspicious because of this coup de grace and the lower target. And if you look, we had this big drop, and all we did was manage to recover a Fibonacci 38.2% of the drop. That doesn't mean we have to stop there. Usually we covered at 61.8. But if we stop there, which hasn't happened yet, if we stop there, and if these lows fall, if that happens, I don't think these lower targets are out of reach. Well, I don't know exactly how to count this, but you can certainly count this as an ABC down. The fibs work. The fibs work on the rally. It's a 38.2% retrace. If that's all she wrote for B, or at least A of B, we could have a wave C comparable to this wave A. Doesn't mean it has to work, but if we drop from here, it's a valid count. Here was your prior consolidation. You had this big rally. All it did is retest the lows of the prior consolidation, and it didn't even close over the high of the consolidation it's in. There's also MEJT divergence here. We have a higher high and lower MEJT. So as of today's close, all we've done is retrace within the consolidation without accomplishing anything. Now that could certainly change tomorrow. If we gap up tomorrow, keep going up, this doesn't mean a thing. But for now at least, we had a strong rally which didn't break out of the consolidation, let alone clear any relevant level from the prior consolidation, which is what it has to do. Tomorrow's pattern has the early low. It could still gap up. There's a lower MEJT target. Unless we gap up smartly, the rules call for it to print by early Thursday. The rally, strong as it was, didn't clear a relevant level, merely retested the lows over an overhead consolidation. The high was a fib retrace of the recent drop, and if the recovery stops it there, we don't know that yet. If it does, it's a sign of inherent weakness. We can't even get to 61.8. It doesn't help the bull's case. There's wave balance at the high a day, as well as a rare pattern which I've seen only at our near market highs. Market leaders I follow actually declined today, which is bearish. Bulls need to gap and promptly overtake the high a day tomorrow, or else lower prices should print regardless of how we close. Recent lows are not inviolate by any of my criteria, and should they fall significantly, which hasn't happened yet, but if they do, I'd expect us to trade much lower over days to weeks before the decline stops. Now, frankly, I'd very much like for this low to hold and for us to continue higher, but rules are rules, and if we don't gap and take this out early, I look for at least 44.31.73, and if we stop here, we better not take out these lows, because if we do, it's a long way down under them, and that's today's call.